How's it going, YouTube? My name is Ari and welcome back to Blue Lion Finance, a channel, as you know, dedicated to investing as well as my personal journey to amassing $100,000 within my Vanguard brokerage account. Now, prior to last week, if you've been following along on the Blue Lion journey thus far, we were sitting at just above $75,000, and as of today, I'm reporting that we are sitting at $73,677.94. So what the heck happened? In today's video, we're going to talk about that macro level view of what happened last week, how it's going to spill into this week, creating more market volatility. As always, opportunities for us to buy stocks on sale, which is exactly how I'm going to close out today's video by talking about the two stocks that I doubled down on my positions with, growing those positions because I foresee a ton of growth left in their future. It's certainly a video you will not want to miss out on. But just before we actually dive in, go ahead, tap on that thumbs up button for me, as it greatly helps me out in growing the Blue Lion Finance channel and getting the word out there. Moreover, if you have not already subscribed, go ahead, tap on that subscribe button for me while you're at it. I not only want each and every one of you along for the journey with me, but want everyone taking advantage of the One Hope Wines $50 gift card giveaway I have underway as we speak, in which I'm going to be sending one lucky subscriber the moment this channel crosses the 1,000 subscriber mark, a gift card to choose the wine of your choice. Now, YouTube, with that being said, let's jump right to it. Now, ladies and gentlemen, here to talk to us about what's been happening in the market and talk about this macro level view of it is, well, yours truly. So let's go ahead and dive right in, because what I first want to talk about is something I have been harping on now for weeks and weeks and weeks. I mean, video after video, I have been sharing with you that we have to be aware of these COVID cases that have been on the rise, not just here in the United States, but on a global scale, because the more cases, the more overwhelmed these hospitals become, and the more likely it is that we're gonna have more mandates put into place, more restrictions, and worst off, another closure, which I don't really know if economies, whether local or on a global scale, can actually handle those closures. So that is why it's a necessity for us to be on top of our game when it comes to COVID, still taking all of these measures very, very seriously. But finally, it has caught up to us. It has spooked the market so much so that we began on Monday with the market in red. Now, the market had only continued on that downward spiral. I mean, we had the news of Afghanistan falling to the hands of the Taliban. And while I don't necessarily believe that has impacted us economically just yet, I'm not too sure how it will. Afghanistan's economy, I mean, it's not like, you know, the second largest like China. It's not the first largest like the United States. But certainly I do believe there will be implications. Ultimately, I think the news just sharing footage of the Taliban in Afghanistan is just adding more fuel to the fire in terms of uncertainty and fear. Then we had the news out of China. That was huge. The news out of China was essentially that China has been losing steam in terms of their economic growth. Now, what exactly is that telling all of us? Is that the United States is going to be trailing China. That is indicative of what's going to be happening here to the world's first largest economy. And I do believe we've already been seeing slowed economic growth, which is of course just creating more and more market uncertainty and ultimately volatility. And last but not least, arguably the scariest news last week was the Federal Reserve coming out and announcing that they're going to be relaxing their quantitative easing, aka that asset purchasing that they've been doing. They're slowly but surely going to begin to pump the brakes. Now, what does that ultimately mean? It means literally we are doomed. No, maybe not doomed, but it does certainly mean that investors are worried about how the economy is going to be stabilized. And ultimately, I do believe that if Delta cases are going to continue to rise, the Federal Reserve is going to take more of a conservative approach, not pump the brakes just yet, which just allows me to feel more secure as an investor to double down on quality companies, hold on to them for the long run, which brings me to the two companies I have doubled down on last week, buying some more shares on sale. Now, with that being said, the first of which is Apple, ticker symbol AAPL, certainly does not need any greater of an introduction. You're probably all watching this very video from an Apple device. So with that being said, let's talk about some numbers. Their latest quarterly earnings report, $81.34 billion. Now that is reminiscent of their growth in the early 2000s, which excites me the most. Now, I made an entire video just a couple weeks back. I will put it in a card above. You can watch it. It goes into a much deeper of an analysis on Apple, but I'm mentioning this in today's video because I don't believe that Apple is losing any steam whatsoever. Not to mention we're right around the corner from September here, and the big iPhone 13 release is on its way, which I believe, of course, is just going to rake in more revenue for Apple. I mean, after all, with every single iPhone that comes out, I don't even believe much changes from phone to phone, but the loyalty in Apple customers is just bar none. I mean, you do not get customers like Apple customers. From year to year, they come out with new products and they have lines out the door, pre-orders up the wazoo, which is why when the iPhone 13 comes out, I only believe they're just gonna continue to rake in that revenue. And for investors, that is very good news for us. Now, Apple continues to also buy shares back, which means that the value of Apple stock is gonna continue to increase. Shareholders are gonna be made very, very wealthy if they're just holding on to Apple. Now, when it comes to Apple's future, they also have the Apple Car in the making, which I believe is going to be a massive play come the next 3 to 4 to 5 years. I mean, EVs is exactly where we're heading, and if Apple can get into the game, I mean, just think about the loyalty for iPhone and Mac lovers. Could they just turn into Apple Car lovers? I do believe so. Now, of course, we're also taking a look as a dividend investor at Apple's dividend. It is currently sitting at a dividend yield of 0.6%, so not the biggest dividend yield, but of course, we're taking advantage of Apple's growth and getting compensated on that dividend as well, which is exactly why I love Apple. Now, Apple fell this past week to a low of $147 per share, so I picked up one share at $149 and another two at $147 for 3 total shares worth of Apple, spending a grand total of $444.59 on Apple. But get this, and even better news, analysts are expecting Apple's median share price to be around $168 per share and a high share price of $190 per share. So all in all, just more growth for Apple to come. Now, with last week being incredibly volatile, it presented me with the perfect opportunity to further double down on a company that I recently began a position with, that being Lemonade, ticker symbol LMND. Now, Lemonade is the newest, the latest, the sexiest insurance company to come out and IPO in July of 2020. So it's just about a year old in terms of when it went public. But what I'll share with you when it comes to Lemonade is, although they're not yet profitable, there is a lot going on here. I think a lot of analysts are having trouble evaluating where exactly Lemonade falls. I think a lot of investors have that same issue. As for me, I am a firm believer that Lemonade is an industry disruptor. I mean, we are talking about the insurance industry being as old as dinosaurs. And with that being said, here comes Lemonade. It is completely driven by AI, the newest, the latest technology, and I honestly believe technology is going to rule the future. Now, what I love most about Lemonade is I have a multitude of friends who are policyholders of Lemonade, and they absolutely love it, which tells me that Lemonade has a fantastic product and that share price is going to be reflective of that product in the years to come. Now, well, right now, Lemonade is not yet profitable. We can take a look at some of their numbers to find they brought in $28.2 million within their last quarterly earnings report. Now, that is up by $4.7 million from their last quarterly earnings report. Any growth is good growth, but then again, because they are not yet profitable, we have to take a look at some other factors as well. That being their cash on hand. They are sitting on over $1 billion of cash on hand, which is incredibly healthy for an insurance company at this stage in the game. And then most importantly is taking a look at their customer count and whether or not it is trending upwards, which it certainly is. It just smashed through rather recently the 1 million customer mark. Now, that is a very healthy number and certainly growing much faster than some of their competitors were when they were first founded. Now, in taking a look at Lemonade's demographics when it comes to their customers, I think this is arguably another important key factor to take a look at, is the fact that Lemonade's vast majority of customers fall between the ages of 25 and 34, which tells me that Lemonade is capitalizing on the next generation of insurees, which of course is the future. Now, all of this leads me to conclude here with talking about Lemonade's rollout of auto insurance, which is soon to come out at the end of 2021. But here to talk about that news is Lemonade's CEO, Daniel Schreiber. So Daniel, take us away.
What kind of investors should really be drawn to Lemonade and what kind of performance and focus we're going to have for them. And what we wrote there was that short-term fluctuations are really noise, and we're not going to credit them as signal. We're going to focus intently on the long-term opportunity that there is before us. And insurance really is perhaps the most disruptable industry on the planet, and the prize is worth fighting for. You know, these are businesses that can survive for 100 or 200 years and do often $100 billion a year. That is something that really means it's worth the investment. It's worth doing the hard work now of building amazing products that absolutely delight consumers on a digital substrate that incumbents just can't compete with. And that does mean plowing in those profits to the next product and the next product and the next product. I do think car is a game changer though, because what we find is selling homeowners insurance without car insurance is really operating with one hand tied behind our back. I think this is a huge unlock of value for us and our shareholders.
And there you have it from Daniel Schreiber, the CEO of Lemonade, just talking about how impactful that auto insurance is going to be. They're going to be able to bundle it into different packages, which is exactly what insurance policyholders are looking for, those bundles of packages to get the best possible deal. Now, when it comes to Lemonade, my own personal portfolio, I bought 5 more shares worth of Lemonade last week for $72.64 each, spending a grand total of $363.20 on Lemonade. My share count is now at 10 shares worth of Lemonade in my portfolio. I'm only going to continue to dollar cost average with these prices being so low right now, and analyst expectations giving Lemonade a median share price of $85 per share and a high share price of $130 per share. But it's my personal prediction that in the next 5 to 10 years, it should be way past $130 per share, but only time will tell. Now, if you liked what you heard, you learned something new, drop comments below. Let me know your thoughts on what you think on the market. Let me know your thoughts on what you think of Apple and Lemonade and the stocks that you're currently investing in. And most importantly, go ahead, tap on that thumbs up button, help me grow this channel and get the word out there. And subscribe if you have not already subscribed by simply tapping on that subscribe button. Now, YouTube, until the next video, I will see you all there.